Hello, everyone. Welcome to Bloomberg Invest Global. I'm Carol Massar, host of Bloomberg Business Week television and radio. Now, if you're just joining us for today's program, welcome, everyone. If you were with us for the previous hour, we're really delighted to see you again and staying with us. We have an amazing lineup of speakers and conversations that are planned for today. We want you to be part of the conversation. So definitely engage with us via the event chat and, of course, on social media as well. Our hashtag is hashtag Bloomberg Invest. I do want to jump right into it because we've got a busy program and day ahead. Let's get started. I'm joined today right now by Michael Sonnenshein. He's CEO of Grayscale Investments, and Sebastian, he's president of One River Digital at One River Asset Management. Grayscale Investments, by the way, is a sponsor of Bloomberg Invest. Gentlemen, so good to have you here. I feel like a lot of things are going on, and definitely when it comes to all things crypto, it's complicated, but it feels like it's a much more constructive criticism that we are having today than we have had in a long time. Let me just ask you, should crypto be in your institutional portfolio? Michael, kick it off for us. I'm assuming you're going to say yes, because I know you've already talked to Bloomberg about pensions and endowments getting involved, but give us your take here.
Well, great to be here. Very excited to kick off this conversation with you both. I would say that depending on the type of institution that you are, crypto most certainly can find a home within the portfolio. One of the amazing things about crypto, whether that's Bitcoin, Ethereum, or other digital assets, is that they don't squarely fit into the definition of currency or commodity. And what we've really seen at Grayscale is that investors of all different investment mandates, and no matter where they've historically felt comfortable investing, that they've found an analog into the crypto ecosystem. And so allocations have come from global macro funds, risk arb funds, momentum funds, deep value funds, and both in the US as well as abroad. And I think for many investors, as they're seeking out diversification, trying to build more resilient portfolios, they're having a difficult time accessing asset classes other than ones like crypto, where the risk reward potential just far outweighs any of the other things that they may be able to look at. So for many institutions, certainly seeing a home for crypto in their portfolios.
There's institutional investors, there's the asset management side in a big way. What about things like, though, Michael, when it comes to endowments and pension funds? What are you seeing in terms of that area? Are we seeing or starting to see any kind of serious buy-in?
Well, it's been a really interesting evolution there. Many of the pensions, university endowments, corporate endowments, they've long actually had allocations to many venture capital funds. And as you know, many of the VCs have been on the crypto train for quite some time. And so while I'd say maybe 18, 24 months ago, you could query an endowment or a pension and ask them if they had crypto exposure, and they'd sometimes say that because of that VC investment, that underlying had made investments in digital currency businesses or into digital currency protocols directly, that they somehow had some exposure. Now, through our conversations at Grayscale with many of these folks, they've come to realize that that's probably not enough exposure for them. And so we have begun to see endowments, pensions move into crypto directly, so that they have now really an appreciation for not only making investments in crypto native businesses that are supporting the picks and shovels of this industry, but also recognizing that having exposure to tokens directly could be a very liquid way to gain exposure to this asset class.
Sebastian, come on in on the conversation. Should crypto be in an institutional portfolio?
Well, thanks again for having us. Really appreciate being part of this conversation and speaking with both of you. Should is always driven by a client's goals and considerations, right? Their constraints. And ultimately, the assets are interesting, but for big institutions, I think the question is, what outcomes do these assets bring, right? What opportunities do they offer? And for us, there's really four I's. It's potential to offer a new inflation hedge, an investment in innovation, as well as a source of income, and lastly, for some, a potential play on inefficiency. When pension funds and endowments are thinking about what role these assets are going to play, clearly growth has been a part of that in venture. But when they think more broadly, they have to think about what are the problems I have in my pension fund today? And why are these assets uniquely suited? Why is this digital ecosystem uniquely suited to be the next allocation, right? At a high level, what we don't see in the industry is large dedicated asset allocation schemes that are pointing directly to digital assets. And we don't see a number of actual dedicated digital asset management companies. There's just two on screen today, and there's not many others. And that tells you how early we are. We think that there are analogs with digital with other new assets that have come before. Think of risk parity, emerging markets, et cetera, where pension plans at first had no exposure. And eventually they recognized that these new assets solved problems. And so they made dedicated allocations within their plans, and then dedicated managers went and served those needs.
So help me out here, because and maybe this is too simplistic a way of looking at something like the cryptocurrency world, and specifically just look at Bitcoin. In April, it was above 63,000. Late May, it was down to around 33,000. July, it was below 30,000. A year ago, it was 10,000 and change. Today, it's back around 50,000 for the first time in a month. I mean, if we saw another asset class with this kind of volatility, we would say this is high risk. It's not for everyone. Isn't this too the case, Michael, when it comes to things like crypto?
It's certainly the case. It's not for everybody. The same way that every investment opportunity is not something that every investor ends up actioning for their portfolios. I think one of the important things that Sebastian brought up that really should be something that viewers and those listening in should take away from this conversation and throughout the entire Bloomberg Invest event is just how early it is. You are seeing tremendous coverage around cryptocurrency and popular financial media. You're seeing the on-ramps into the ecosystem to continue to get developed, but it really is still early days. Bitcoin's only been around for the last 10 or 12 years. And so one of the important things to remember when we think about institutions is that there are still some legal and operational hiccups when it comes to whether or not they can allocate. Many of them don't have the legal or operational wherewithal to hold a bearer instrument like Bitcoin directly or like Ethereum directly. And so what we're starting to see is some of these institutions either leverage investment vehicles that can give them that type of exposure, whether that's through Grayscale or otherwise, or they're actually developing dedicated funds whose documentation and investment mandate actually does allow for that type of exposure. So while I would say that it's still early days, that is probably the most important takeaway for folks listening to this, that it's not somehow when you see price movements that suddenly the wave has been missed or somehow crypto has gotten away from them.
Well, and Sebastian, on our planning call, you talked about a colleague who said, man, we've seen cryptocurrencies or Bitcoin have, bubbles and bursts, 5-6 times already. So to that, that certainly speaks to the volatility, but does it also speak to the resiliency of the crypto area in terms of it continues to come back?
Absolutely. We think that this asset class is new and important, and it's much more than one or two assets, right? We think that the resiliency you've seen in the case of Bitcoin and with Ethereum relates ultimately to the powerful impact that these assets could have in changing the way that we move assets, right? So the web moves information. And you see people talk about Web 3.0. What are they talking about? What they're talking about here is that cryptocurrency will likely be the way that we move assets around the world. That's why institutions are paying more attention to these assets and these opportunities, and that's why they're not deterred by the high volatility and the uncertain nature of the assets and how they're held. That's why, candidly, we were brought into the space by one of our largest clients last year when we entered the markets, and we made the largest institutional allocation to Bitcoin and Ethereum when Bitcoin was at 15,000. And Ethereum was at 400. Our client and other clients are definitely concerned about the volatility and the way in which these assets trade, but they see the potential. And they need, as Michael said, there are hiccups with regards to legal and operational. There are clearly structural impediments at a high level you could summarize as partners and plumbing, right? This industry is growing its partners in plumbing to enable institutions to onboard. And they're coming because they see that this may well be the way by which assets move in the future, and it's much bigger than a couple assets that are a little bit volatile in your portfolio.
I want to get into the regulatory environment because that's certainly a big piece of this. Let me just ask you, because you talked about Bitcoin, you talked about Ethereum. Those are two that we talk about a lot here at Bloomberg. Is it going to be a smattering of different currencies that stay with us? I mean, we pull up our monitor and the list is rather long, and we know that there's a ton out there. Is it Bitcoin that continues to be the dominant cryptocurrency? Is it Ethereum? There were some stories that I was reading this morning that the flows are moving out of Bitcoin and into Ethereum. Michael, what do you think? Do we know at this point?
I don't think we know at this point. I think that the digital currency ecosystem is continuing to allow for new use cases and new protocols to come into the fold. We've recently looked very substantially at protocols that are part of the DeFi or decentralized finance ecosystem. We've started to see the confluence of digital assets in gaming, digital assets in privacy, digital assets in file storage, digital assets and video streaming, right? We're starting to moving into these new use cases that were not yet imagined when Bitcoin and Ethereum and other major protocols had been created and brought into the fold. Now, while that is certainly the case and the barrier to entry to launching new assets is relatively low, we would suspect that over time, the hundreds, if not thousands of digital currencies will ultimately get consolidated. We often think about, maybe analogizing digital assets to the precious metals family. And we look at things like gold, silver, platinum, palladium, et cetera, all being part of a singular family of precious stones or precious metals. However, each of them have an addressable market, an addressable use case, and a different price. And through that lens, you may find that there's a cohort of digital assets that grow and thrive and coexist, and each of them do, in fact, occupy their own addressable market, have their own use cases and their own prices. Whether or not that's Bitcoin, Ethereum, other assets, it's early days, so it's hard to say what that'll look like. But if there's any telling how this ecosystem evolves, certainly going to see the emergence of more protocols before we see consolidation.
Before I bring you back, Sebastian, Michael, do you have a price on Bitcoin, though, since that seems to be the dominant player, though, that we talk about?
I never give Bitcoin price predictions. I've been in this industry for 8 years, and what I can tell you is really just what investor behavior has been. As you said, the Bitcoin price has moved around quite a lot, even recently. And so when we see dips in prices, we often see that as an opportunity and investors moving in to buy those dips. If they fundamentally have not changed their perception or their conviction in an investment, but they can buy an asset 10, 15, sometimes 20% cheaper than they could a day, 2 days ago, well, that's a compelling opportunity, and investors tend to action those types of opportunities.
All right, does 50,000 though feel low or high?
You know what? I'm not going to comment on that, Carol, but what I will tell you is that if you had asked me 18 months ago if Fortune 500 companies would be holding Bitcoin on their balance sheet, I would have told you that it would be premature to think that that would be the case.
All right, Sebastian, what about your take on Bitcoin in terms of pricing? How do you think about, pricing when it comes to digital currencies?
Sure, and I'll also jump on a comment that Michael had mentioned around kind of analogizing or thinking about these assets in the context of other sectors that have come before. I think that's helpful to think about Bitcoin and Ethereum as mining assets. But I think what Michael said, and we agree with, is the crypto universe is actually potentially far larger of a sector, right? We're talking about the potential for cryptocurrency to remake finance, which is a very large portion of the S&P 500. We're talking about cryptocurrency remaking gaming, right, and media and art. We were talking earlier in our conversation about the brain drain that's now happening from traditional, investment categories into crypto. And what we see from an investment perspective is that cryptocurrencies become increasingly important because the innovation that's occurring in these assets. These new assets are bringing some of the brightest and most creative minds in our country to solve problems. And so from an investment perspective, it's really hard to think that this will continue to be a narrow asset class when we see the level and importance of talent and the creativity in terms of assets that's happening every day. We were talking earlier, it's hard to keep up with the news.
Yeah.
And why is there so much news? Because there's so much happening here, so much innovation.
So I'm 10 minutes
Right.
in and I've got to get to the regulatory side. No, it's funny because I was thinking of the headlines this morning, Tinder rolling out a virtual currency, B of A adding crypto research to meet the growing institutional demand. And then you had JP Morgan CEO Jamie Dimon saying Bitcoin has no value and authorities will soon regulate the hell out of it. And then you also have the Fed maybe releasing its long-awaited paper on central bank digital currencies as early as next week. There is so much going on. Let's talk about the regulatory oversight. Legitimization, a key word when you talk about this space and institutions and ETFs. You had Jay Powell last week up on Capitol Hill saying he has no intention to ban cryptocurrencies. You had the Wall Street Journal reporting last week about the Biden administration considering ways to impose bank-like regulation on cryptocurrency companies that issue stablecoins, according to those in the know. Feels like, Michael, big steps forward in terms of that legitimization. How do you see it? What are your anticipation in terms of the regulatory oversight when we get it and what it means for this really industry and really true widespread institutional adoption of cryptocurrencies?
Well, I think if you rewind the clock maybe 2-3 years ago, investors would often cite regulatory uncertainty as perhaps one of the elements of thinking about digital currency exposure that might give them pause. Today, I don't think that that's the case at all, and certainly not what we're hearing from investors. It is a patchwork, though, when you zoom out, when you look at the US versus other parts of the world. Certainly here in the US, you've seen guidance around digital assets like Bitcoin and Ethereum from the SEC, from the CFTC, from the IRS, from the Treasury, from the Fed, from the Office of the Controller of the Currency. And these are all meaningful steps forward that, from our view, really validate the asset class and investors' minds, actually speak to the staying power of the asset class. I think even just a year, maybe 18 months ago, oftentimes, new legislation may pass across the House or a congressman or a senator's desk, and they might not want to look at that because there wasn't, in fact, a strong understanding of these protocols and the potential that they have to create jobs, to create tax revenue, to embrace innovation. Today, these are topics that are being discussed on the Senate floor. We just saw this when we had the infrastructure bill come through DC just a few weeks ago, and you have never seen an industry galvanize so quickly to educate policymakers and regulators about the merits of these technologies. And so I think you're only going to see further adoption and validation of crypto from policymakers and regulators. However, policymakers and regulators have a tough job. The crypto ecosystem has a lot of momentum. It moves very quickly. It evolves very quickly. And so as we continue to unlock new use cases, see new attributes become developed around digital assets, it'll be important that we continue to serve as an educational resource to those folks so that they do approach regulation in a fully informed way and not just regulate by enforcement, but actually create new regulatory frameworks for these assets themselves.
How much of the slowness in the pace is just that this is a whole new asset class, Sebastian, or how much is it the old establishment, old Wall Street? I mean, you worked at BlackRock for a long time. I mean, how much is it the establishment pushing back and maybe fearful of what they're going to lose potentially in the process?
Well, I think when it comes to these assets, Michael is absolutely right. We've seen a lot of regulatory progress, right? IRS, et cetera, over the last few years. But there's so much progress that's yet to occur. Just backing up, if global financial assets are approximately 220 trillion, right? Crypto is approximately 2 trillion. That's 1%, right? It is so small what crypto is today in the context of what it could become, right? That's part of the reason why when we set up One River Digital, we started an advisory council that was chaired by the former chair of the SEC, Jay Clayton. He's joined by Courtney Elwood, who was the former general counsel of the CIA, as well as Harold Ford Jr. We think that there is much more regulatory progress to come. There's much more education, to Michael's point, that we are doing as well. And there's much more engagement that needs to continue to happen. There are various projects that we're working on with various partners within the United States that we think could help to retain US's position of leadership in finance. And candidly, that's what's at risk, right? Cryptocurrency is a significant source of innovation, and it is pointed squarely at the financial services sector. And we view our role to be part of that engagement, to be part of that educational process, to ensure that the U.S. continues to be a leader in global finance.
Let's talk about timing. We did a poll. We asked, when will we see widespread institutional adoption of crypto? And maybe we can bring up the numbers for everybody who's watching right now. In terms of less than 5 years, people said about 50%. Less than 10 years was roughly about 23%. Never was roughly about 27%. Michael, do you have a time frame for when you think this will happen?
So I don't look at the institutionalization of this asset class as a function of time so much as I think about it as a function of infrastructure. When I look at the companies and businesses that are creating products and services around digital assets today, they are developing world-class solutions natively for crypto. So we're talking about the development of indices. We're talking about order management systems. We're talking about tax lot reporting. We're talking about APIs. These are all being built around digital assets today. However, that infrastructure is not connected to the legacy financial system, which is why investors see such an opportunity within digital assets themselves. Digital assets are still not being accessed the same way that institutions are accessing stocks, bonds, ETFs, any instrument for that matter. And when you see that connectivity come into play, whether that takes 6 months, a year, 5 years, we'll see, you're going to, in fact, see a tremendous amount of capital that can flow into this ecosystem, not to mention a lot more involvement from many more parties, both in the US and abroad. And that, we feel, is honestly going to be one of the biggest catalysts for this asset class in the near term.
Michael, you've been pushing to convert Grayscale into an ETF. I mean, any thoughts on when you said that would be, you've told us before that would really change the conversation. Just quickly, any update when you think that can possibly happen for you?
Yeah, so our flagship fund, Grayscale Bitcoin Trust, is ticker GBTC. It's the world's largest Bitcoin fund, and we are 100% committed to seeing it convert to an ETF. We are encouraged by recent commentary from the SEC that suggests that perhaps their previous concerns with the underlying Bitcoin market have maybe in fact been resolved, in which case GBTC could convert to an ETF format. We do think that'll be a watershed moment, not just for GBTC holders, but crypto overall. There are a lot of investors who've obviously gotten involved in digital assets like Bitcoin today through GBTC and other means, but there are also a lot of investors waiting on the sideline, waiting for the familiarity and the protections that come with an ETF wrapper. So it's going to be an important moment when the SEC is ready to approve those kinds of products.
Is it a 2022 story?
We'll see. I mean, recent commentary, the SEC chair is speaking again today on this topic. So excited to see if there's further commentary coming out of the chairman's office or perhaps the SEC staff around their thinking as they look at these applications.
Sebastian, just got about a minute and a half left here. I want to wrap up with the two of you. What needs to be on our minds as we continue to have these conversations about the investment world over the next 3 days here at Bloomberg Invest Global? NFTs, tokens, digitization. I mean, what is it that we need to be thinking about and keeping really front and center?
So I think that the key thing, and when we speak to our institutional clients, these large pension funds, endowments, sovereign wealth funds, it is to abstract from just talking about two assets to talking about the transformative power of this technology. And people say that they believe in blockchain, but they really need to engage with how these assets could change how all of their assets are eventually traded. If you understand what an NFT is and buying a JPEG for a price and securely being able to transact that, right, and to be able to move it without constraint, that starts to inform how you might think about the rest of the assets in your plan. And it really is to understand how much change is coming to asset management and finance, and to not be focused on the volatility in the price of two assets, but to be focused on how assets may change, how they move around the world.
Michael, saved you 15 seconds. Your final thoughts.
I would just reiterate some of the things we've said today, Carol. It's early days and crypto is here to stay. It's not going to be appropriate for every investor, but it first starts with education. So if firms like ours and Sebastian's can be of help, we welcome the opportunity to engage.